very bullish, ultra bullish. Market has hit the peak. Put call ratio is 1.8. So hello guys, so welcome. So today we shall discuss something about put call ratio. So very important point. So if you're an option trader or a trader, so the put call ratio is so important to you. Whenever there is a highly unpredictable market, people look at put call ratio. Whenever market has rallied so much, put call ratio is so important. Whenever market falls so much, we need to see put call ratio. So now PCR, if put call ratio is ideal scenario is equal to 1. That means both buyers and sellers are equally strength. If put call ratio is above 1, let's say it is 1 to 1.2 or 1.3, this is bullish. If put call ratio is less than 1, let's say it is at 0.9 or 0.8 or 0.7, this is bearish. If put call ratio is less than 1, it is bearish market or bear market is in control. If put call ratio is above 1, it is bull market. And everything has its own limit. If put call ratio is equal to more than like 1.8, this is, people call it as overbought levels. That means this is the extreme point, anytime market may crash. This is what people say. So if PCR is very high, it's very dangerous. If PCR is below 1, it's bearish, market is in bearish trend. If if PCR is almost equal to 0.7 or 0.6, people called it's like oversold levels. Market is bottomed out. Market is bottomed out. If market is bottomed out, if PCR is equal to 7, we may expect bounce back. We can expect a pullback rally. We can expect a market to go up. We can say market is bottomed out. If PCR is very less, it means market has bottomed out. If PCR is very high, we can say it's overly bought or highly market is at peakest tip, anytime crash may come. If PCR is almost equal to 1.8, crash may come. If PCR is equal to 0.7 or even if it comes to 0.6, it's like we can say market has bottomed out. Using this PCR ratio, let's see where to check, what to check. With proof we will check. So now I'm just going to nsindia.com. This is nsindia.com, option chain. So go here, just type Nifty here, Nifty will come, and once the Nifty will come, Nifty derivatives click karo and it opens. You click on this option chain will come. Now let us see the open interest. So to check the put call ratio, we need to check this open interest and this open interest. So scroll down. Can you get the total number? So this is the total number of open interest on the call side. This is the total number of put OI. So let us divide put by call. So I have made a Excel sheet. I have taken things of 3 months. I have taken February and I have taken March. I have taken April also, and I have put it in an Excel sheet. So let me open it. Yeah, this is an Excel sheet where I'm getting like, I've taken the calls, open interest, puts, open interest. I'm dividing put by call. Very important. Don't divide it call by put. So put by call divide karna chahiye. Put by call. I've taken average. See, I've taken average of all 3 months, and the average sum is this. I've taken a sum and I divided this by this. I'm getting a ratio of 0.89. Average, I'm getting 0.89, 3 months average. But if you take only the February month, this is February month, this is February, this is March, this is April. So this is average. This is average. So this says that market is bearish. PCR says market is bearish, but if you see only February month, it says market has bottomed out. So let's take average of 3 months. It will prove us a better idea. It will give us a better idea. So put call ratio is bearish as of now. Market is bearish. So apart from this put call ratio, we need to find the link between India VIX and PCR. So what is India VIX? It's a Indian Volatility Index. See PCR, one more question you may ask. Sir, PCR can be found even in Opstra. So you can see directly they are calculated and given us. So 0.7, I told you February month is trading at 0.71 for me, so calculations, but it is 0.73 for them. So maybe they have calculated little here and there, no problem. So just 0.7 is a correct number. PCR ratio is at 0.73. You can take it into consideration. So let's say you want to check India VIX. So India VIX I have taken in tradingview.com, indoor-tradingview.com. I just went here and I have taken India VIX. See, India VIX is trading at 24. See, whenever India VIX increases, so it means volatility has increased. Indian stock market volatility has increased means definitely if VIX increases, the more chances that market will fall. So if VIX rises, it's very dangerous. People call, sorry, if India VIX rises, it's very dangerous. If India VIX cools down, then market may rally upside. So India VIX comes down, market will rally. If India VIX goes up, then market may crash. So India VIX is near this crucial point, that is, this is very crucial point we can say. If India VIX breaks this high, then we can head towards a bigger crash, I can say. So India VIX is indicating very bullish momentum. So if India VIX rises, market will be highly volatile next couple of weeks or couple of months. So India VIX has to cool down, then only we can expect a uptrend in the market. See, both PCR is indicating negative and India VIX is indicating something big is going to happen. So be little alert, cautious in the month of March, because we have 5 state election results, we have American Fed rate increasing, even Indian interest rates will be at least hiked by 50 paisa, 25 basis points in upcoming RBI policy once this elections gets over. So there is a lot of drama, hangama in the market. So in this scenario, you should be very careful. So don't take big risk or don't dump big money. So keep putting your money like 1/3. You put some money now, put some more money once it falls. If it falls much more, you put some more money. So don't put bulk amount at one shot in the markets at present scenario. So keep your money in liquid BIS. So liquid BIS will hardly give you 1 or 2% returns per annum. At least it is giving something. So liquid BIS is a good thing to buy now. So just temporarily park your money in liquid BIS. So India VIX rising up and PCR. See, India VIX is highly volatile. So if PCR should come to, let's say, 7, 3 months average, it will come to 0.7, and India VIX cools down to like 16, 17. If India VIX cools down, PCR bottoms out, then we can expect a market to bottom out. If market bottoms out, we can expect a big uptrend. But VIX should cool down, PCR should come down much more. That means still there is a pain in the market. That's what I'm telling. Still there is a pain in the market. Still we can expect a downtrend in the market based on India VIX and PCR ratio. So PCR is all about put call ratio, where if put writers, so very simple, if put writers are less, that means they don't have guts. Very simple. See, what is the meaning of put to call ratio? So if put writers are less means people don't have gut feeling to write the put. So who are the put writers? Institutional players. They are not selling the puts. They are not selling the puts. Reason is they know market is going to drop. If number of put options, open interest is less compared to call open interest, that means put sellers are less, call sellers are more. That means market is bearish. That's what the put call ratio says. Put call ratio says whenever it is below 1 bearish, above 1 bullish, and once it hits 1.8 very bullish, ultra bullish, market has hit the peak. Put call ratio is 1.8, market may crash, and put call ratio is nearing to 0.7, 3 months average, then market has bottomed out. It's just like RSI. So oversold, market may bounce back, overbought, market may crash, something like this. So I hope this has given a very brief and simple idea and simple solution for all your PCR question. So thank you. Please like, subscribe to our channel. Thank you.